Hello friends, so today I'm here before you to discuss the various recommendations that has been made by the 55th GST Council meeting that was held in Jaisalmer. So in this particular video, I have tried to figure out some examples on the various recommendations that has been made, because few of the recommendation that has been mentioned in the press release are not very much clear. There is some confusion with the recommendations that has been made. So I've just tried that the same could be explained to you with few of the examples that can be drafted on this particular presentation. So to start with, the first and the foremost clarification that has been provided is in relation to section 16.2b. Now section 16.2b, what are the changes that they have, what are the clarification that they have provided in section 16.2b? They are saying that if the contract is X work contract, for example, there is a supplier in West Bengal who is selling goods to a buyer who is in Assam. So the goods are laying with the supplier in West Bengal, but the goods will be delivered to the buyer of Assam in West Bengal itself, that is on the gate of the supplier. So in this case, as per the provisions and the clarification that has been made, goods are deemed to be received by the recipient as per 16.2b of CGST Act 2017. Again, I would like to give a summary of this particular clarification that has been made, that if there is a supplier in West Bengal who is selling goods to a recipient of Assam, but the goods are handed over to him in West Bengal itself, then in such case goods shall be deemed to be received by B. The goods shall be deemed to be received by B. It is not a case whereby the goods are in transit and will be recorded in case of receipt of the goods. This is the basic difference that they have clarified. It is not the case of goods in transit. They are saying if the goods are delivered at the gate or by the supplier in West Bengal itself, it will be deemed that the recipient of the goods, who is in Assam, has received the goods. So moving ahead with the second recommendation that has been made is very interesting, and this is in relation to the taxability of the vouchers under GST. Taxability of the vouchers under GST is somewhere very complicated, but with this recommendation, I think it will become very easy for anybody to understand. I'll further elaborate this particular provision with an example which is available in my presentation. First, we'll have to understand what they have done. They have omitted few section provisions and rules. First, section 12.4 and 13.4 from CGST Act 2017. They have omitted rule 32.6 from the CGST rule, and the aim is just to resolve the ambiguities in voucher treatment, right? So to understand what is the ambiguity and what are the changes that has been suggested by the recommendation in this recommendation through the recommendation in the GST Council meeting, let's understand with this example. First, they have said that in case of principal to principal distribution, GST will not be charged, as it will be deemed that it is nor a supply of goods or services. For example, ShopSmart sells vouchers worth rupees 500 to a retailer gift hub at 450. Try to understand. ShopSmart sell vouchers worth rupees 500 at rupees 450 to gift hub. Now gift hub later sells these vouchers to the end customer. Now see, ShopSmart have sold ShopSmart vouchers are worth rupees 500 and these are being sold to gift hub at 450. Now this is a principal to principal transaction, and as per the recommendation, the transaction between ShopSmart and gift hub is on a principal to principal basis. As per the recommendation, this transaction is not subject to GST because it is not treated as a supply of goods or services. Clear, my friends? Coming to the second provision which has been recommended, that is principal to agent distribution. Now what is principal to agent distribution? In the earlier case whereby we were discussing that the Shop Smart is selling the vouchers worth rupees 500 to Gift Hub at 450. But when it is principal to agent distribution, the things get changed. How it gets changed is that Smart Shop appoints Quick Gift or somebody as an agent. Now, Smart Shop is giving the voucher of 500 to Quick Gift at 500 only. But once the but when Quick Gifts sells these vouchers, he get rupees 50 as commission. Rupees 50 as commission. Now, this is principal to agent distribution. The voucher itself is not taxable, but the commission of rupees 50 charged by Quick Gifts is considered as a taxable supply, and GST is payable on commission basis, right? So the amount of rupees 50 which is charged as a commission will be taxable. Third that they have recommended is additional services. Now Quick Gift in the process to sell these particular vouchers for which he is getting commission or whatever he is getting profit, if he is offering some marketing or promotional services for the vouchers, for example, it charges 10,000 for advertising campaigns. Now, on this 10,000 GST is applicable because services like advertising, marketing and promotions are considered as taxable services, right? And the fourth scenario is unredeemed vouchers, right? Now, what is unredeemed vouchers? For example, there were 1,000 vouchers sold, of which out of 1,000 vouchers sold, 50 remain unredeemed even after the date of expiry of the voucher. For example, the date of the expiry of voucher is 25th December 2024. But after the expiry, 50 vouchers are still unredeemed. In that case, ShopSmart accounts for the value of this unredeemed voucher as income, right? The income booked from unredeemed voucher is not subject to GST because it is not nor considered as supply under the recommendations. Because it will be not considered as supply under the recommendations. So, apart from this, what other changes they have recommended is amendment in Schedule 3 of CGST Act 2017. Now, what is this amendment? As per this amendment, which they have done by introduction of clause AA in paragraph 8 of Schedule 3, AA in paragraph 8 of Schedule 3 of the CGST Act 2017. The provision is supply of goods warehoused in cess. Supply of goods warehoused in cess to any person before clearance for export. Before clearance, right? To the domestic tariff area. Shall be treated neither as supply of goods nor as supply of services. To understand it better, let's discuss this example. The warehouse location is in cess, that is in Chennai, right? The supplier is ABC Limited, who have sent these goods to be stored in the cess which is located in Chennai, right? Now, recipient of these goods is XYZ Enterprises. What is the change? The goods are stored by ABC Private Limited stores finished goods in the cess warehouse for further transaction, right? For further transaction. Till now, they have not sold the goods, but sale to XYZ, when this ABC whose goods are being warehoused in special economic zone in Chennai is selling goods to XYZ Enterprises before clearance from cess. That is, the goods are not cleared from the cess. The goods are laying in the special economic zone in the warehouse. Ownership is transferred within the cess, but the ownership is transferred to XYZ Enterprise. But goods are physically stored in cess, right? To understand it again, let's rediscuss the example. There is a warehouse which is in Chennai, which is located in cess. ABC Limited has stored its goods in the warehouse in Chennai, right, which is in cess. XYZ is a buyer of the goods who is outside the cess, right? But in this case, ABC Limited is selling the goods to XYZ Limited within the cess. The main difference is that the ownership of the goods is transferred, but the goods are physically laying in the cess. In such case, if XYZ clears the goods for shipment to Bengaluru, that is in his own area. Now, as per the amendment to Schedule 3, this transaction, that is sale within cess before clearance, is neither a supply of goods nor a supply of service. No GST applicable on this transaction, aligning it with the custom bonded warehouse provisions. right? Let's move ahead. Now, a very now we'll discuss issuance of a clarification that has been issued via circular, that is reversal of ITC by e-commerce operator, right? The clarification has been provided on supplies made under section 9(5) of the CGST Act 2017. What they have said? They have said no proportional reversal of ITC required under section 17(1) or section 17(2) of CGST Act 2017. Applies to supplies where e-commerce operator are required to pay tax under section 9(5). If they are paying tax under section 9(5), that is under RCM, for specified services that they are availing, in such cases they are no more required to do ITC reversal on proportional basis. Let's again understand this particular scenario with an example. Right now is an e-commerce operator facilitating ride hailing services, right? Right now is an e-commerce operator. What it does, it incurs expenses such as marketing, employee salaries and office maintenance for which it avails ITC, right? Now, under section 9(5), right now must pay GST on ride hailing services, that is passenger transport. The clarification that has been provided is that right now does not need to reverse ITC related to its general expenses, that is marketing, office maintenance, etc. Even though some supplies that is ride hailing services are taxed under 9(5). That is, if right now is taking some services which are taxable under RCM, that is under section 9(5) of the CGST Act, in that case they don't have to proportionally reverse the ITC in ratio to the services which has been availed which are chargeable under RCM, right? So this has been clarified that such general expenses are not liable to be reversed. Moving ahead, a relief but not a relief is something that this government has provided in one of the recommendations, that is waiver of late fees for GST and 9C. They have specified that to provide relief, the GST Council recommend a waiver of late fees for delayed filing of GST and 9C, but with conditions. Conditions are always there whenever this government is providing you anything. So the first condition is the late fee waiver applies only to portion of the late fee that exceeds the amount payable up to the filing date of GST and 9. Now this line in itself is very confusing. I'll read it again. The condition 1 is the late fee waiver applies only to the portion of the late fee that exceeds the amount payable up to the filing date of GST and 9. And second condition, to benefit from the waiver, the taxpayer must file GST and 9C no later than 31st March 2025. Again, to understand this particular provision, let's take an example. The late fee for filing GST and 9 was 5,000 at that point of time, and you have already filed GST and 9. But when you are filing 9C, the late fine that is calculated for suppose is 8,000 rupees. 5,000 you have already paid in GST and 9 at the time of filing. Now at the time of filing of GST and 9, if the late fine is 8,000, now you need to understand what is the waiver. The waiver is that the 5,000 you have already paid, the 3,000 that is liable to be paid. Under this waiver, the taxpayer will not pay 8,000, but only the portion up to 5,000. The amount payable when GST and 9 was filed, which is already filed, and the excess late fee of 3,000 for 9C will be waived if GST and 9C is filed by 31st March 2025. So let's move ahead with another provision that has been inserted by recommendation in the GST Council meeting is Section 148A of the CGST Act 2017. In past, we have been reading this in various newspapers and must have come to your knowledge as well, that few of the RTPs are trying to evade tax in the products which are at high tax rate, that is tobacco products or alcoholic beverages. And keeping that in mind, the government has recommended, the GST Council has recommended a section that is 148A of the CGST Act to be inserted. Now what this 148A is going to do? to prevent tax evasion, and ensure transparency in the supply chain for evasion-prone commodities. Now, what is evasion-prone commodities? It cannot be commodities which are at 5% or 12%. That is my understanding. So the commodities which are in 18%, 28%, or commodities which have cess on it, like tobacco products and alcoholic beverages. So what they are going to do, what they are going to implement, they are going to make some unique identification marking system in the, you can say that at the time of removal of the goods from the factory to the time of reaching the goods to the buyer, they may introduce some kind of you can say identification marking or chip or anything, that just like RFID devices, whereby they can track the goods, that the movement of the goods has actually taken place. And such tracking system will be developed in the entire supply chain marketing to monitor the supply chain, so that there can be a track and there can be a check on the commodities which have high risk of evasion. Next, clarification on recording details for online services. Now, this is another recommendation that has been made by the GST Council in order to mitigate the various confusion that has been there and some litigation that has been there. So what are the services covered under this? Is online mobile gaming, online information database retrieval and retrieval services, right? Now, what is the requirement for the supplier as suggested in this particular recommendation is, it is mandatory to record the name of the state. It is mandatory to record the name of the state of the unregistered recipient on the tax invoice, right? We will understand this with an example. I am just reading out the recommendation that has been made. So requirement for supplier is to mandatorily to record the name of the state of the unregistered recipient of the tax invoice. Second, the state name deemed as the address on record for compliance purposes. And legal references are aligned with section 12(2)(b) of the IGST Act and supports rule 46F of the CGST rules 2017, right? So let's understand this particular provision with an example. So let's take this example. This is available in my presentation, which is attached with the video, so you can download it from the YouTube channel. PlayZone, an online gaming platform, provides an online gaming services to an unregistered recipient, that is Mr. Rahul in Maharashtra, right? PlayZone is a service provider, online gaming service provider, and Rahul, who is located in Maharashtra, is the service recipient, but he is unregistered, that is not having any GST number. So now, as per this provision, what has to be done? PlayZone must include Maharashtra as the name of the state of the unregistered recipient on the tax invoice. In the tax on the face of the tax invoice, the service provider, that is PlayZone, will have to mention Maharashtra. Along with that, according to section 12(2)(b) of the IGST Act, the place of supply for online services is the location of the recipient. And in this case, it is Maharashtra. Location of the recipient will be considered as Maharashtra, right? And the name of the state recorded on the invoice, Maharashtra, will be deemed as the address on record, right, of the recipient for GST compliance purposes. Very simple. Like just to summarize, PlayZone is a service provider, an online gaming service provider. Rahul is located in Maharashtra. He is taking the services. He is an unregistered person, right? So now it is the responsibility of the supplier to mention it on the face of the invoice that the services has been taken by Rahul, who is in Maharashtra. As per this address that will be mentioned on the invoice will be taken as address on record, and accordingly the place of supply will be determined, which is Maharashtra. This is basically to make sure that the state will not have that the proper tax is being distributed between the states, right? So let's move ahead. Another important provision, and very interesting. I personally don't know why these things are being done. The things are being done in such a way that it creates more litigation. Now, when one of the most important, most talked about, and the most awaited case was Safari Retreat, which was decided by Honorable Supreme Court, and earlier was decided by the Odisha High Court. In this particular the section that was involved was section 17.5D of the CGST Act, where there was a confusion with the phrase plant or machinery and plant and machinery. But what this government has done, what this GST Council has recommended this time is amendment in section 17.5D of CGST Act 2017. What they have amended? They are proposing to replace the phrase plant or machinery with plant and machinery. Now, this has been done from retrospective effect, that is from 1st July 2017. Yes, you heard it right. This particularly means that with this recommendation, they have nullified the benefits that has been provided somewhere by the Supreme Court in the case of safari retreat. So now if this recommendation become a law, I personally believe there is no relief that can be enjoyed by the mall owner, that can be enjoyed by the warehouse owners who are giving it for further rental. But I see many litigation which will again come up, many because various case laws are there, whereby, because see, in this particular recommendation, you can get an idea that department itself is saying that we have made a mistake, right? So if you have made a mistake, that cannot be corrected from retrospective effect. If this can be done, then why the mistake that has been done by the RTPs are considered under section 74, under section 73, penalties are being levied, interest are being levied, taxes are being collected. So this is an unfair practice by the GST Council, whereby they have recommended that this particular section will be amended retrospectively from 1/7/2017, whereby all the benefit that has been provided by Honorable Supreme Court are therefore nullified. So another provision is provision for temporary identification number TIN and composition levy amendment. This particularly is nothing but government have, the recommendation that has been made is in Rule 16A, whereby there is a provision which has been added, which will be added rather, this because this is a recommendation that provides for generation of temporary identification number from unregistered person. In case there is some tax liability which has to be paid by the unregistered taxable person, so now they will not have to take a new GSTIN or do any other thing. They will be provided a temporary identification number by the department in which they can deposit their tax amount. Further, moving ahead, another important change that has been made is in the case of IMS. Now they have recommended to give legal validity because in various discussion it has been seen by various learned speakers and faculties. It has been said that IMS has no legal validity, but the department has come up with some changes which are very, very, very important, right? I'll summarize this particular provision that has been recommended is, firstly, amendment in section 38 and rule 60, which will provide a framework for generating to be based on the action taken by the taxpayers on the invoice management system. So there are 4 options in the invoice management system. One is to accept, one is to reject. One is to accept and one is to reject, and one is that we don't do anything. Now, when we don't do anything with the IMS, that is, we neither reject or we neither accept, it is deemed to be accepted, right? So now they are saying whatever action that you are taking in IMS, accordingly to be will be generated. If you are rejecting, it will, the invoice you are rejecting because somebody has wrongly sent it to your GSTIN, that will not be part of your GSTR to be, and accordingly you will not get the ITC for that particular invoice. Also, they have come up with a various very important amendment in section 1334(2). Now, if a credit note has been issued by the supplier for ₹100, that is 18 is the tax, and that is issued in my name. So if until and unless I accept this credit note, the supplier will not get a reduction in the tax liability by 18 rupees. Now you can understand the seriousness of this IMS, that particular person have issued me a 100 rupees credit note, reducing his tax liability by 18 rupees. Now, when this particular 18 rupees come to me as a credit note, I will have to accept it or reject it. If I accept it, the liability of the supplier will reduce by 18 rupees. But if I don't accept it and reject it, then the liability of the supplier will not reduce. And I believe this is very harsh. I don't know how it is going to be implemented. Let's see. Another most important thing that has been suggested is linkage of 3B and GST at 2B. Amendment is section 39(1) and rule 861 will be done, as per which filing of form 3B for a tax period is permitted only after form 2B of that period is made available on the portal. So if 2B is not available, it has been seen earlier that before the 2B is available, few of the RTPs are filing the return. Now it is not possible because it has been said that if you accept, then only the ITC will be available to you. Now 2B, if 2B is generated, then only you can file the 3B. So let's move ahead. Now, very interesting amendment. I don't know why this amendment has been done, because this particular amendment will give more opportunities for tax evasion, whereby a popcorn has been categorized in 2-3 different rates. First is ready to eat popcorn with salt and spices. Ready to eat popcorn with salt and spices. If it is salt and spices is being mixed in the popcorn, then 5% if not pre-packaged and labeled. 5% if not pre-packaged and labeled, but 12% if packaged and labeled, right? But now this is about salt and spices. What if you add caramel to the popcorn? Now, as per the recommendation of the GST Council, it becomes a sugar confectionery and 18% will be charged on the particular popcorn. So the decision to regularize the issue for the past, I don't think this is a very good decision recommendation that has been made, because this will give more avenues for tax evasion, whereby anybody can play with the rate of the taxes. But now this has been recommended, so this will become law, so we will have to follow it. So again, to summarize, popcorn with salt and spices, labeled and pre-packaged 12%, not labeled and not pre-packaged 5%. If added caramels or chocolates or something for the flavor, then 18% is the GST rate. Moving ahead. Another important change that has been recommended in this particular meeting is GST on restaurant services in hotels. The definition of declared tariff will now be omitted. The definition of specified premises will be amended to link it with the actual value of supply of accommodation units. Now, what does this mean? It simply means GST on restaurant service in hotels will depend on the value of the accommodation supply in the preceding financial year. If 18% GST with ITC, 18% GST with ITC if accommodation value is greater than 7,500, 5% GST without ITC if accommodation value is 7,500 or less. Hotels will have the option to opt for 18% GST with ITC on restaurant services based on the declaration. The declaration has to be given before the start of the year. Now, one more change that has been made is GST rate has been increased on sale of old and used vehicles. Now, 18% will be applicable to all old and used vehicles, including electrical vehicles other than those specified below. What is specified below, I'll tell you. But the main thing is that the vehicles, the old vehicles which were in 12% is now will be charged at 18% as per the recommendation of the council. And with this, the cost of the prices of the second-hand vehicle will get higher, right? And the exception that I was telling is already those vehicles which are under 18%, right? So now 12% vehicles which are including electrical vehicles will be charged at 18%. Those which were in 18% will remain in 18%. So this is the change that has been recommended by the GST Council. And what is the impact? Now the GST application will be only on the margin. GST is applicable only on the difference between the purchase price and the selling price, or the depreciated value if depreciation is claimed, right? And also GST is not applicable on transaction involving unregistered seller. Now, a person who want to sell his vehicle and he's not registered in GST, then in that case GST is not applicable. Now there are a few changes in the GST rate. I'll quickly move with this slide. First is fortified rice kernel GST rate has been reduced to 5%. Gene therapy exempted. LRS system components, IGST exemption extended to systems. Merchant exporter, compensation rate reduced to 0.1%. IAEA inspection team imports, IGST exemption for equipment and consumable samples subject to specified conditions. Food inputs for free distribution, that is concessional 5% GST rate extended. Apart from this, there are 3 more important changes in the GST rate changes and exemption for services. One is supply of sponsorship services. To bring the supply of sponsorship services provided by body corporate under forward charge. If there is a body corporate and they are providing the advertisement services, earlier the advertisement services was under RCM. So even if a body corporate was providing advertisement services, the RCM was applicable on it. Now it is on forward charge mechanism as per the recommendation. So this is all about the various changes. There are few 2-3 other changes that I'll quickly take you into. One is 50% fly ash content. If there is a 50% fly ash content in ACC block, the rate will fall under HSN 6815 and 12% GST will be charged, right? Because earlier, see, ash brick and other definition of the bricks were there in the definition or clarification were there in the GST law, but there is no definition for ACC blocks. So now the government has clarified that ACC blocks containing more than 50% fly ash will be categorized under 12%, right? And further they have clarified that there will be no GST charged on for paper and resins if the same has been supplied directly by the agriculturist, right? So this is various changes that has been recommended by the GST Council in the 55th GST Council meeting held in Jaisalmer. I have tried to cover all the points in a summarized way along with some examples. If you like this video, do share this video so that this can be shared with other people who are looking for various clarification on this particular recommendation that has been made by the GST Council. And also, if you have some query or comment to be made, do leave your comment on the video so that I'll try to address all the comments, all the queries that that is being made by you. Thank you so much for this video. I'll try to come again to you with some new videos and some interesting videos on GST and other case laws. Thank you so much for your time.